Festival of Lights is here. We at CNBC-TV18 wish you, our viewers, a very happy Diwali. It's been a year of the unexpected in the stock market. A year in which the usual heroes kind of failed. The underdogs actually shined. The year when large cap stocks lagged and mid caps and small caps sparkled. A year where traditionally strong sectors like private sector banks, for instance, they underperformed, and the once ignored PSUs sizzled like never before. It's been a roller coaster filled with plenty of learnings and yet more questions. Therefore, this is an apt time to get into the classroom with our market masters. Hello and welcome to the Diwali Masterclass. I'm your host, Surabhi Upadhyay. Today, we have with us a very vibrant audience in our studios, and they're brimming with lots of questions, as I can see. They're looking to ask questions on their investing habits, on the funds they should buy. And to answer all these queries, we have with us three market veterans who will teach us the key lessons to keep in mind and, of course, take in all of these heavy-duty questions that are going to come their way. So let me welcome my guests on the show. We are joined by Nilesh Shah, MD, Kotak Mahindra AMC, S. Naren, ED and CIO at ICICI Prudential AMC, and Mihir Vora, Chief Investment Officer at Trust Mutual Fund. Gentlemen, such a pleasure to welcome you in the studios. Season's greetings to all of you. And season's greetings to our audience as well. It's a nice, vibrant bunch we have here, and really appreciate all of you coming in and joining us here in our studios. So, before we get started, this is how this classroom is going to work. Let me quickly tell you, folks. We have our three teachers who have prepared three separate lessons for us, and each of them are going to talk about that subject in a bit. And then we will allow you, of course, to ask all of your questions as we go along. So promises to be interactive and very interesting. But before we get started, I must do a throwback, right? Because it's been such an interesting year. And as I said, I mean, we've learned a lot, and yet we are, confused even more. So Nilesh, throwback to the Samvat that's closing out. What thoughts?
So this Samvat had a lot of unexpected turn, but at the same time it rewarded patient investing. Yes, there has been a crazy run in micro caps, small caps, mini caps, but fair enough, that's the nature of the market. If you are an investor, despite all the things which have happened in the world, there is reward in our market.
Okay, so be patient, stay the course, and the markets will reward you. That's been perhaps Nilesh's takeaway. Naren, what about you, and what stood out for you as you look back at the last 12 months?
I think what stood out was the fact that India macro has been managed so well in 2020 that inflation and current account deficit and all those macro issues which the Western world had, India did not have. And this is despite, Ukraine having problems and so many other problems which came up in 2022. India had one of the most calm macro environments, which resulted in equity investors staying with the industry and continuing to do systematic investment plans in mutual fund industry and in direct equity also investing. This resulted in the most unsafe markets of equity actually doing very well, and the most safe markets in equity doing badly relative to that.
Imagine that large caps were almost a no-go zone, right? And it was all about high-flying mid-caps and small caps, and we have lots of questions from the audience exactly on this. But Mihir, your thoughts on the last 12-odd months?
One is, as Naren mentioned, the resilience of the Indian economy and the way the government has, really manage the oil price issue, etc., in spite of lots of geopolitical issues out there. So amazing resilience and good job done by the RBI and the government. I think what stood out was the resilience of the Indian entrepreneur. When you're talking about mid caps, small caps, micro caps, is basically thousands of entrepreneurs' success stories now coming to fruition. We can debate valuations, that's a separate issue, but the fact is there are so many interesting segments, companies which have been, nurtured and now growing to a certain size. It shows the vibrancy of the Indian economy. And the third is the fact that a lot of these sectors are actually being supported indirectly or directly by government initiatives, whether it's on capital spending or enabling through PLI, etc., creating a better environment. So I think we are on the right path, macro-wise as well as policy-wise.
Okay, before I get started with our classroom, as you said, if one is a long-term investor, a long-term India bull, then there's no problem. You just keep investing and keep riding the wave high. But for the near term, if I ask you about the next 12 months, the new Samvat that's going to start, Nilesh, what is your feeling? I mean, are you a little concerned or are you still very bullish? What's the frame of mind with which you're getting into Samvat 2080?
So whenever you have to take a short-term view, obviously there are challenges. Last year, none of us would have predicted that small and mid caps will deliver this kind of return. In fact, I remember many stalwarts who were bearish on equity at that point of time. So one, we have to accept our limitations that we don't have ability to predict short term. Undoubtedly, market knows the challenges. US interest rates likely to remain higher for longer. Energy prices could get disrupted thanks to what's happening in Middle East. In India, consumption growth will depend upon this festival season as it has remained subdued at the bottom of the pyramid. And more importantly, our valuations are pricing in a perfect scenario. And on top of it, there is an election in the middle of the year. So there are enough challenges, but market already knows this, and despite that, it is trading where it is trading. I think as long as India delivers on 3G, the first G of growth, this quarterly results, we are showing earnings growth of about 26% for the results which have been declared. Some of our peers haven't shown 26% earnings growth in 5 years. We have to deliver earnings growth which is better than the peers. The second thing is governance. Today, our governance standards are comparable with the best in the world. Many of our peer groups are lagging far behind. Now, obviously, they can catch up. Governance standards will keep on improving. So we have to ensure that we remain in the lead. We respect investors' capital, which is coming in. The third G, the 3G and the final G is green. We are the lowest per capita carbon emitter in the world. Today, we have 21% of our energy coming from renewable sources. Today, we are one of the few emerging markets which is on its way to achieve COP26 targets. I don't think so. World has given us enough credit on this green transformation. And we must ensure that this is well known to investors. This combination of 3G, growth, governance, and green, as long as we deliver, we'll be able to overcome all the challenges. In a very simple one-line message, every correction is a great opportunity to invest into India.
Okay, so that's the eternal bull, I guess, the bullish view that is there for the long term. So with that, let me quickly kickstart the classroom as well. And Nilesh, why don't you just quickly take it away? You are going to talk about how to dispel darkness when it comes to investing. Okay, tell us more.
So Diwali is the, festival of lights which dispel darkness. In India also there is darkness on financial awareness. In mutual funds, a lot of investors have made money over 15, 20, 30 years. But total number of investors which we have is 4 crore. On the other hand, in cryptos, most of the investors would have lost money. And 18 crore investors went and dabbled over there. Now, why are people going into where there is guarantee to lose money and not coming in sufficiently where there is opportunity to make money? Is it intelligence? Answer is no. India's most literate state spends more money on lottery than what they have accumulated in equity mutual funds over the last 3 decades. In lottery, you are bound to lose money collectively. Otherwise, lottery guy will never run the business. And yet, annual spending on lottery is more than the cumulative AUM in equity.
So there's a long way to go.
We have to create financial awareness so that people invest nicely, wisely, and they get financial security. 18 crore Indians have lost money in cryptos. 10 crore Indians would have lost money in gaming. 2 crore plus Indians have lost money in Ponzi schemes from PSEL to City Limousine. And there are so many people who lose their future in F&O trading, from cash, equity to commodities to everything.
If you could just hold that thought, I quickly want to get to the audience to get a dipstick check, Anybody in the audience who experimented with crypto or invests, nothing wrong with it, just trying to understand, who are the high risk takers here? I think we have 1 hand going up, all right, 2 hands going up. Anybody who's an active F&O trader? Just to get an idea of the risk appetite of this audience. Okay, about 2 to 3 people here. So in general, I think people want to experiment with asset classes or, securities that could offer better returns if you take high risk.
आप आपकी health के लिए experiment करते हैं by eating one cola, drinking one cola or eating one junk food, it is fine. But if that becomes your main food, then there is worry. So as long as you are experimenting, please, go ahead and do it. But for ordinary investors, they have to remember that trading is injurious to your financial health.
Okay, fair enough. I think that's saying it as you see it, and you see so many investors out there. We do have to take a very quick break. Now, that is just the first lecture. We are, waiting to hear from our other 2 market masters as well. So we take the break and the conversation continues on the other side.